Greetings and welcome to the Superb Diamond Rain Show. This is your host Superb, broadcasting from Edinburgh, and this is episode 36, Credit Cards, as part of the financial series. So last week we spoke about overdrafts, and this week we're going to be talking about credit cards, which in some ways are quite similar, but different, I guess, in other ways. So obviously, I'm going to talk about what credit cards are. So we've got, obviously, you'd go to your bank, and you'd ask them for a credit card, make an online application. You'd get a card. It'll either be a MasterCard, a Visa, or an American Express, and the bank would decide based on your credit rating, which we'll do another episode about, what limit you're going to be given. So you could get a limit really small, maybe 200, up as high as 5,000, 10,000, 20,000. And what a lot of people find is the longer they've had the card, sometimes the company will automatically increase the limit, sometimes by your consent, sometimes by you applying for limit increases, so you can start off with a very small limit and gradually make a bigger one. Usually this can happen by getting close to maxing out your card, and the company just decides that you might need a bit more, and in some cases it could be that you're finding that you're not happy with the limit you've got, and that you need a bit more, so you can request it. I think it's every 3 to 6 months you can make a request to increase your limit. Some cases they grant it, some cases not. So to talk about how they work, it is quite interesting really how they work. I mean, you start off with the card, and basically it works in all stores. You can use it online, and basically, it's got chip and pin, so you can, use it in most high street stores to buy things. And it's very popular for using online. A lot of people feel it's more secure to use a credit card online. If you're, paying for flights, a lot of people say it's pretty good for that. Ultimately, you get like a period of time which is interest-free. A lot of people refer to this as sort of 56 days interest-free. And basically what it means is, if you had the card at the beginning of, say, February, you'd have 1 month before your statement would come out. So say you received the card on the 5th of February, on the 5th of March, your statement for the credit card would come out, and anything you'd spent between the 5th of February when you got the card up until the 5th of March when you got your statement would appear on that statement, and that would be a billing cycle. So the billing cycle from the 5th of February to the 5th of March, exactly 1 month. Once you got your statement, you would then establish how much you spent during that billing cycle. So let's say from between the 5th and the February and the 5th of March, you'd spent £100. Then your statement would read £100 spent. They then give you what's known as the grace period, which is a further, say, 2 or 3 weeks after your statement date, which would probably bring us up to roundabouts the end of March. So maybe the 30th, 31st of March. So you'd then have 2 or 3 weeks to basically pay the balance in full, and you would get no interest charge. The other thing to bear in mind is after the 5th of March, after the statement comes out, that begins a new billing cycle. So if you paid what you owed between what you spent in February and early March off in end of March, what you'd spent between March 5th and the end April 5th, you would then owe like another few weeks after. So basically the billing cycle just continues and continues. I did recently learn that you can lose the grace period, and that can happen when you carry a balance, which I'll try and get into in a little while. So what I'm talking about at the moment is trying to avoid interest with credit cards. And the only way to avoid interest is to pay when you're pay either before the statement comes out in full, or pay by the due date, which is just after the grace period. Many people choose not to necessarily, or maybe they can't pay it in full every month. So they do a thing where they carry a balance, and this can lead to interest payments over the months. And this can go on. And to give you an example, like you could buy something as little as £100, and you could pay lots and lots of interest on that, to the point of even paying double for what you intended to buy. So let's say you wanted to buy a computer for £500, you could end up paying £1,000, £1,500, 2-3 times what you should have paid if you'd just paid cash. What I find with credit cards is there's no real bottom to them, because you could keep spending on credit cards up until the limit, and then you could get a limit increase. And if your income isn't matching up with your credit card limit, you'll end up just choosing an option like paying a minimum payment. Now, a minimum payment would be something as little as, say, £10 to £25, depending on your balance. But unfortunately, when you pay the minimum, you're not actually chipping away at the amount owing. So you're kind of basically backwards and forwards. You're not really clearing the debt. You're kind of just, it's considered that you're paying your bills. They're not saying that you're not. But unfortunately, it's going to take you longer to clear your balance. And they do have warnings of this on the statements. They do say, if you don't pay your credit card in full, it is going to cost you more money and take you longer to clear your balance. And that's one of the things where, people could be really good steward of money, looking after things really well. A few things in life could happen. A few emergency expenses or miscellaneous expenses could come up, and they could go from being so organized that they always paid their card off in full to kind of taking longer to pay it off, or basically taking months to years. And they can even if their job income doesn't increase, or they don't bring any other extra income into the household, they can get really behind on it and just basically end up having more than one card and just paying the minimum payment, which, as I say, it's beneficial for the bank, but it doesn't really help you to get the card down to zero. And a lot of people become very dependent on their card as well, so they'll find that they need it to, because they haven't got enough of their income, because it's all going in interest. They start relying on it, and it becomes like a crutch, a bit like an alcoholic with a drink of alcohol. So interest is a big thing, and it really does compound and work against you. So that's, you will get people that will tell you things like, oh, well, I pay in full every month, and I've been doing this for years and it's worked really well for me. There'll be times when, it won't always happen that way, and you will, things are going to happen in your life, and you have to kind of be aware of that. One of the other things that attracts people to taking out credit cards is there's a lot of offers on. So you get like interest-free periods. So you might get a card that will say, 20 months, 0% on purchases. Or you might get a card that's offering 0% balance transfer. So move your debt from this card to a new card, and we won't charge you to move it. Or in the other case I mentioned about the 20 months, and basically just, you basically get 20 months without any interest. So it sounds great, and it could be the right move for some people that are paying high interest on one card to kind of move to that card. But it's all based on credit, checks and whether you qualify for that card. And you might not necessarily qualify for that if you've got quite high balances on other cards. And if you do end up on a 20-month, some people take it for granted. They think, well, I can pay it back. I've got 20 months. So, they, instead of sort of getting a plan together to pay it down as quickly as possible when they move it across, or even they just start from zero and they just build it up, they can, fall into a lot of problems with it, because it kind of reminds me a bit of when you go to a furniture store. So they might offer you interest free for 12 months. And at the time you walk out with loads of furniture and you're really happy. And then obviously, 6 months pass, 10 months pass, and you kind of almost forgot about that you have to pay that back within 12 months and you haven't prepared for it. And obviously when it goes past those 12 months, the interest kicks in, and it's not very nice. You get charged a really high rate of interest, and that's kind of what they're probably secretly hoping is going to happen. And it's the same with credit cards. You can get completely punished for, as I say, not clearing a balance within that period. And another thing to mention about these sort of bonus periods where you get no interest, if you don't run the account well, so you'll still have like a minimum payment, but it just goes off the balance, each month. And if you fail to make that minimum payment on time, they can take away that 0 month, 20 month deal. And then you could end up with a high interest that they could set as high as 17%, 30%. I mean, most credit cards these days are in and around 17, 20%. And then you've got the bad credit ones, which are 30, 35, up as high as probably 40, maybe 50. I'm not 100%, but yeah, and they typically use them to build credit. So you'll get really high interest ones that people that can't get, say a mainstream typical credit card that is 17, 20%, they'll only be able to qualify for ones that are 30 and 35%. And if you've already had a history of bad credit, not saying that you can't change, but I think that they hope that you're going to be not very good at managing that, so that you get into even more trouble. And they might give you small limits, start you off on 200 because they don't trust you, 500. But when you've got interest rate of 30%, it's soon going to add up, and it is payday loan-esque, it is dangerous. So I feel that's pretty unfair when that happens, but people do it just to rebuild credit. That's how it's advertised. It's like, oh, take out a really high interest credit card, we'll get your credit back. So I would be wary of those. One of the biggest things that I've learned is the rewards credit cards. So you'll get ones with airlines that are associated with banks like MBNA and what have you. You'll find that there'll be a lot of people that do a lot of traveling, and they'll be convinced that if they use their card for everyday expenses, they can build Airmiles or Cashback. I mean, if I was looking for a rewards card myself, I would probably prefer Cashback than rewards for Airmiles, because Airmiles, the rules are always changing. Airmiles can expire. They can change the rules anytime, as to, before this amount of Airmiles will qualify for this flight, or this distance away, but now it doesn't. So you need more. And you have to have the exact amount of Airmiles if you want to purchase a particular ticket, little things like that. And again, it's encouraging you to spend more than you have, because you go into a furniture store, you see a perfectly adequate sofa for 500, and then you think, well, there's one for 1,200. If I spend that, I'll get more Airmiles or get more cashback. So it's kind of tempting you to spend more, which is kind of like not what you really want. You know, if you are going to use it, you got to make sure that you're spending money that you have so that you can pay it off. So I would not recommend rewards cards. And people will tell you things like, oh, I've made loads of money from rewards and that I'm doing really well, I'm ahead. I'll ask this question though. I mean, how many millionaires that you know or have heard of have made their money from credit cards points? I don't think there's many to mention. I'm pretty sure that the likes of Warren Buffett, Bill Gates, Steve Jobs never needed credit cards or, you know, got into debt heavily to you know, be successful. So, you know, I know that you will argue there are people that use debt to make money, but I'm just talking about consumer spending here. You know, I'm just talking about, you know, buying everyday things. You know, you don't need, you know, to do that. It's just not necessary. There's a lot of risk involved. So yeah, the rewards are just a lure to spend more. And, you know, as I say, I feel like you're spending 100,000 to chase 1,000. It's just, you know, pointless, you know. Obviously there is late fees. So if you know, they normally encourage you to set up a direct debit. You probably know in a previous episode my opinion on direct debit. But yeah, they recommend that you set one of those up to sort of pay at least your minimum or pay in full. Obviously it does make sense to make sure that you do pay, but of course you need to have the money. And if you don't have the money for any reason, you know, you'll be hit with late fees. And as I said earlier, your special deals may end. So your interest, you know, free period might end. It affects your credit, obviously. You know, it's a really, really terrible thing, and it can affect so many things. So again, what we talked about the risk and if you really need one, because for me, I mean, a debit card and cash works perfectly fine. It does everything I need it to. So yeah, I guess you got to pay in full every month if you are going to go down the credit card road. But as I say, there's a lot of risk involved. So much can happen. So many emergencies. And I mean, I knew somebody that was traveling in an airport and they didn't have any currency on them and they was bored in the airport. So they said that they ended up spending on what they referred to their emergency credit card. And I mean, I was laughing to myself because I thought, yeah, it's going to be an emergency when you refer to a credit card as an emergency card. And to me, it's going to get them deeper into debt. You know, it's spending for the sake of spending. You know, maybe just wait a couple more hours and you'll be leaving on your flight. You know, you'll be able to get some currency. There was no need for it. You know, you're getting these vending machines nowadays in hotels where you can do contactless payments. So you can buy crisps or a can of Coke or a bottle of Coke with a credit card. And for me, it's like, why would you want to buy a bottle of Coke on a credit card? You know, to me, it just does not make sense at all. There's a possibility that you could end up paying interest on that bottle of Coke or that crisps or whatever. Because I remember the old machines used to have coins that you put in, so it was much better, you know. One of the big things that people talk about a lot, I believe it's Section 75 of the Consumer Credit Act, which gives protection if companies go bust. And this is very true. And I mean, I can understand if you were booking a flight or a package holiday, you know, there is a possibility that, you know, it could go bust, the company, and you could lose your holiday and all your savings that you put into it. One thing I'd make people aware of is that Visa debit cards have similar protections in place, and people will use this argument, well, I'll probably get the refund quicker if it's through the credit card company, and also it's not my money, it's the credit card's money. But ultimately it is your money, because you have to pay it back one way or the other. So, you know, that whole thing about, oh, well, I'm using the bank's money. It's like, you're using it, but eventually you're going to have to pay it back. And you're going to use your money to pay it back. So it is kind of your money. And, I mean, if you use a debit card, I'm not talking about the ATM function of a debit card that, you know, you withdraw cash or you know, put a pin in, you know, a chip and pin. But if you swipe a debit card, it kind of acts almost like a credit card. So if you go into a hotel or a car rental place and they swipe a debit card, there's a different kind of protection there that basically allows you to utilize Section 75 Consumer Credit Act. So that gives you the same protection. And, you know, it may take a bit more time. It may take equal amount of time, but you will ultimately get your money back, especially if there's like fraud, or if a company does go out of business and, you know, you lose some money, you will get reimbursed one way or the other, especially if you'll report it within, I believe, is it 160, 180 days? Don't quote me on that. I'm just going off memory here. One of the big questions you've got to ask is, do you need a credit card? So you'll get a lot of youngsters, in particular students, that are, you know, thinking, well, maybe in a few years when it's all over, I might be looking to get a house, and, you know, should I get a credit card? I'm not going to say to people not to get it, because, you know, in some cases, people that get it can learn by getting it. So sometimes it's good to, you know, see how they will get on. I mean, if you in general feel like you're a good steward of money and you've managed your bills well, and that, you know, you're not short of money all the time, then it, you know, it could be worth thinking about getting one. But in terms of how to use it, I wouldn't be looking to spend everything with my credit card, like all the bills that you have and all the outgoings. If it was just for building credit, maybe I'd suggest putting something really small on it, maybe like Spotify or Netflix, and then just paying it off in full every month, because it's something that's affordable and you know you can pay back. You know, there'll be people out there that might use it to fill up the car with diesel or petrol, so that could be another idea. But as long as the amounts that you're spending on it are very small, and as long as you have the money in cash or even in savings to pay it back, then, you know, and you have respect for it. You've got to have respect for credit cards, because at the end of the day, you know, you could think that you're in control, but then they could control you. And I mean, they don't call it MasterCard for nothing. You know, it can change the relationship. And, you know, there's that old Bible quote, the lender is, the borrower is slave to the lender, you know. And if you're using a MasterCard and it's mastering you, and, you know, you're paying it every month and all your money's going towards paying it, then I would say it's not a particularly healthy relationship to be in. And as I say, we talked earlier about, you know, if you have a bank account with your income being paid in, if you spend all your income, there's a bottom, you know, there's an end. But with credit cards, you could max out your limit. You could end up with interest payments following that limit max out, which sort of adds on top of what you've already reached the limit of. And you could end up owing loads of interest on it, getting loads of fees and penalties. It's just very risky. That's all I'm going to say. And as I say, if you were going to do it, put something real small on it, something that you know you can handle. And, you know, make sure that you've got it set up to pay off each month in full. Never carry a balance. I mean, I'm still a believer that cash is king. You know, in terms of going into a supermarket, you know, if you bring an envelope with cash in it, you're probably much more likely to not spend it all. because you'll feel it more when it leaves. But with a card, you could just walk in and be like, I'm feeling really hungry. I want this, I want this, I want that. Oh, there's something there that's new, I hadn't seen before. I'm going to get that as well. And when you swipe the plastic or put the chip and pin in, you don't feel it. And you don't, cash is still the best. I don't really care what anyone says. The other great thing about cash is when you buy it, that's it. It's done. It's over. When you use a credit card, you've got to still pay it back. So it's not like you're just, swiping the card and it's a done deal. You're still got to pay back that money. So there's still, and so much can happen in between the transaction and, you paying it back. So that's the other thing to bear in mind. Similar to the overdraft, talked about building a cash buffer in place of an overdraft. And for a credit card, people are like, well, there was an emergency, so I used the credit card, car broke down on the way to work. There's ways that you can get to work. You can ask friends for help. You could borrow a car. You could, save up a few months till you're able to buy a second-hand car rather than a new one. Having an emergency savings a better option. I would aim for at least 3 to 6 months buffer, maybe a bit more, but again, could be all built over time. But if you have got problems with credit cards and you are spending like crazy and relying on them, I would say cut them up and maybe work a plan of paying them off as soon as possible. And, another example, like there'll be times when, going back to the whole rewards thing, you'll want to use your credit card to book something online, and you'll notice that if you pay by Visa debit, it will only cost what it should cost. But if you pay with a credit card, there'll be extra fees to cover sort of merchant costs or merchant fees. So it basically leads to paying more. So something that should cost 1,000 will cost, say, 1,050, and it's just not worth it. Why would you pay an extra 50 to use a credit card when you can just pay with a debit card and just pay exactly what they're asking? And I say that for all my bills. Whatever my bill is, I just pay them to the penny what they ask. I never pay over that. And it's the same. That's why I have such an issue with credit cards. I think, well, if you're gonna spend more just to have a credit card, then what's the advantage to that? Surely you want to pay what you owe exactly, to the penny, to the pound, to the dollar, So that's my thing. And, people don't realize that the credit cards can be a trap. At the end of the day, it's temptation. The card's there. It's waiting for you. If you didn't have a credit card, you couldn't do what you want to do if you didn't have the money. So therefore, you'd have patience. You'd be able to say, well, I really wish that I could have gone out this weekend, but right now I don't have the money. Whereby a credit card will be like, oh, I've got a limit of 2,000, 6,000. I can't really afford to go on holiday, but because I've got this card, I can. And people will say things like, to hell with it. I had fun. Okay, I'll need to pay my card back, but it's just not wise. It's not, you're going to suffer and you're going to pay for it later. And people will say things like, oh, but you missed an opportunity because you didn't have a credit card. But it's money that you don't have, and you've got to learn to live within your means. And at the end of the day, all I'm going to say to people is, if you feel the need to experience it, go ahead. It's there for you. If it's better to learn your own way, because I've been in debt myself, and I know what it's like, and I've learned my lessons from it. And I know, it's been good to learn, to go through it. But I would also say that you can learn off others. if you see other people struggling that are deeply in debt, you might walk down your street, all your neighbors might have the best cars in the drive, the latest gadgets, the latest iPhones, whatever you want to call them. But, you don't need to be like them, that you don't need to have the best stuff, and you don't need to copy them, that you can, as Dave Ramsey would say, live like no one else, so later you can live and give like no one else. And that's my view on it. So yeah, ultimately credit cards are risky, completely dangerous. I don't really see the main advantage to them, deep down. I mean, people could try and argue with me all day about benefits of credit cards, but if you've got the cash, just pay by cash. It's pretty simple. So I feel I've done my best at covering it. It's not the easiest thing to discuss because there is so much to them, and maybe I'll do a future episode on it again to cover some more areas within it. But yeah, this is credit cards, I guess, and it's part of the financial series of Superb Diamond Range. So yeah, thank you all for listening, and if you enjoy it, please recommend it to your friends and family. If you get a chance to go over to iTunes, it'd be great to leave a review. Be appreciative of that. And I hope you are enjoying the financial series, and we'll be catching you next week. We'll be talking about mortgages. So I'll be catching up with you guys soon, and be wise and be patient.